All right. Thanks for coming out, everybody. And
this phone can figure it out.
by all means, ask questions, interrupt me, and raise your hand and ask questions in the middle of it if you have them. And that will, otherwise I'm just going to go right through this and it'll be fast. But stop me if you have a question as it comes up, and I welcome that. So don't think you're breaking my flow or anything like that. So we're here to talk about marijuana stocks, U.S. marijuana stocks. And it's an interesting point because we have Canada, who has already legalized and pretty much provided us an example that we can look to. This is what happened. This is how it played out. And now we're in the same steps in the US space, and it's different. It's all politics. We have to follow along with bills and votes and presidents and all that. So we know they're going to go up. That is a guarantee. They're going to go up. We just don't know when. And timing is important, as always. But this is just some information. We're going to go through. Oh, geez. Okay, so we're going to go through my experience, different brokers, risk to reward, the catalysts that are going to ignite the sector when they happen. The different companies, we'll look at 4 individual companies just as a starting point. And again, leading you guys, this is essentially just an intro that you guys can use to guide your own path and start walking down and say, oh, well, that company sounds interesting. I want to learn a little bit more about that. And then you hop on Google and you learn more about the company. And that is a way to just guide your own research going forward from here. So aside from that, establishing a game plan is certainly important. The psychology about it all, money definitely has major psychological impacts, and knowing how that's going to affect you. If you're new to investing or new to risking money, there's going to be a whole bunch of new feelings. So for those of us who have already gone through it, to be able to say, you know, you're going to feel this, you need to be aware of this, and basically just learning from our mistakes, because I have made a lot of mistakes in the last 9 years doing this, and any mistake that I can let you know about ahead of time, I'm finding that people pretty much have to learn mistakes themselves for it to really sink in. You got to feel that pain. But if I can give any kind of insight that can prepare you for that, that obviously is a benefit. And then other resources that we can use going forward. So the standard disclaimer is I am not licensed. This is not financial advice. This is for educational purposes only, and you can't sue me. Or don't sue me. You probably could, and then we have to pay a lot of legal fees. Let's not do that. So essential information for what we're going to be looking at. My experience, 9 years doing this, marijuana stocks is how I got interested in the stock market. I read a book, The Emperor Wears No Clothes by Jack Herer, and that just blew up my mind. CBD, industrial hemp for textiles, like this is the next big thing. And there's a way to make money off of that. And so I had 2 routes where I was either going to learn stocks, or I was going to go to Canada and learn how to grow the plant, and stocks was easy while I was still in college. So I put my first investment was a marijuana penny stock because that's all that was available back then. And I quickly realized I need to figure out what I'm doing. You know, I don't know what I'm doing. So then I started reading, and it was just a huge rabbit hole, and now I'm a full-time trader, and that came from 9 years ago, first getting involved with it. So again, like I said, things went really well with Canadian legalization. We knew what was going to happen. The way that they went about legalizing is they had a presidential candidate, Trudeau, and his platform was, we're going to legalize marijuana if we're elected. So the polls gave clues that he's going to win. And then when he won, the stocks go up. And then when he implements legalization, the stocks go up. So that was a little bit different in how we're going to see US play out, because the US is so fragmented, with states having their own laws and federal different than states. And it's a very different environment in that regard. So while there's lessons that we can learn, it's definitely not the same thing. If it were going to be the same thing, it would be something like Bernie Sanders starts coming ahead in the polls, and we know Bernie's going to legalize if he gets elected. And it's more, as the closer we get to the election, the more the polls start to favor him. That would be a similar scenario to what happened in Canada. So if that does not happen, it's going to play out differently as far as the timeline. So we're now patiently waiting for the next opportunity in the US. Again, I have no doubt in my mind that there is going to be significant money to be made in the stock market in the US marijuana sector. I just don't know when. I don't know when Congress is going to get its act together. I don't know who's going to win the 2020 election, but we know it's just a matter of time. So for those new to stocks, you have to have a stockbroker, and something that stockbrokers and pretty much anybody in the financial sector, they want things to seem difficult. They want financial jargon to confuse people. They want people to think, you can't do this without me. My job is dependent on people not knowing what to do in the financial world, and they want to keep it that way. So now that we have the internet, we don't need them. We can learn anything we want to know on YouTube, on Google. So stockbroker is just a fancy way of saying a website. And if you talk to somebody who doesn't know stocks and you say you need a stockbroker, they're going to think I need a guy in a suit with a tie to tell me what to do with my money. But it's not. It's just a website. So I've always used Fidelity for the last 9 years. I've had no reason to go to somewhere else.
And I heard that some of these marijuana stocks aren't on the mainstream things. Is that true, or can you get all the access to the ones you're wanting on Fidelity?
Yeah, you can. And I'm going to talk about that going forward as well. I'll hold off on that, but I will get to that. So I've used Fidelity for 9 years. I've had no reason to look elsewhere. Their customer service has been really good. It costs $4.95 a trade, which is pretty much in line with where the industry is. It's slowly, a dollar drops off that every few years as competition heats up and technology makes things easier. So if you buy, it's $5. If you sell, it's $5. So if you're doing that a lot, it adds up. If you're not doing it a lot, it doesn't really matter a whole lot. So I suggest Fidelity just because that's where my experience is. They do have access to all the companies that we would be looking into, and everybody else probably does as well. Interactive Brokers is another one, TD Ameritrade, E-Trade. Robinhood's the new fab one with millennials, and that's because it's free trades. And you definitely give up some of the experience for not having to pay for trades. They don't have access to all the companies. They don't have the same infrastructure as a brokerage that the other companies have. So for me, I would rather pay a little bit per trade and get the full customer service aspect of things. And what you want to do is set up an individual brokerage account. That's what it's called. So individual brokerage account, and that just means you can buy and sell a stock. You connect it to your bank account, you put money in, you take money off, and it's very easy. It happens with a couple clicks in a couple days once you just link those accounts up, and it's just like anything else. Yes, sir.
What do you mean, like the full customer service aspect of it? What?
So just being able, I can hop on Fidelity and I can chat with a representative, and literally in 20 seconds, I'm talking with someone, and I've done that 100 times and they answer my question every time. So it's just been a really good experience of having that. And like I said, if a company's not charging fees, they're cutting elsewhere. So whether it's customer service or whether it's not allowing you to purchase all of the companies, there's only a select few companies in the marijuana sector that they would allow you to buy and sell. So it's just limiting in a certain degree. So you pay for the full experience, so to speak. So risk and reward is always inversely correlated. The most risky things are generally the things that can give you the most reward. And the low risk is low reward. If you want to do something safe that's going to guarantee 3% a year, there's not a lot of risk in that. But if you're looking for something more and more gains, there's going to be a lot of risk. That's why Bitcoin, so high risk, high reward. We have no idea what Bitcoin's intrinsic value is, but it ran insanely because it's just this asset that people were speculating on. Speculation has a lot to do with risk and reward. So the fact that right now we don't have a clear legal path forward to legalization is why there is so much potential reward. Because as soon as we get one of the bills passing, or if Bernie Sanders is elected president, as soon as that happens, the stock prices go up, there's less reward potential at that point, and the risk comes way down. We know legalization is going to happen. So while it's in this still gray area, there's the biggest reward possibility, but there's also the biggest risk in the sense that, well, if nothing gets passed in the next 6 months and then Trump wins again and it's going to be 4 years of business as usual, that might delay things, and that's when the stocks could go down. So we're talking about stocks that can very easily in a 6-month span drop 40, 50, 60%, or very easily in a 2-3 month span can run 100%. So it's very volatile, and it's a lot to stomach for people who are watching their accounts go up and down. And that's where the psychological aspect comes into things, because it's very volatile. So you obviously don't want to risk more than you can afford to lose. And it's the kind of thing where something this risky, again, for me, it's not risky in the sense that I know it's going to go up. I just don't know when, as I said. But it's the kind of thing when I first got into cryptocurrency where it's like, okay, I don't really fully understand this. I know there's an opportunity. As soon as I put money into that account, that money was zero. And I just psychologically wrote it off as zero, complete loss. Because from that point on, anything is a bonus, and it's just easy sailing. If you have that psychological mindset, it's all gravy. But otherwise, you're feeling sick to your stomach if you look and your stocks are down 15%. And time frame is so important. If you're looking 1 or 2 years, you're looking towards the run-up and the hype towards legalization. If you're looking 10 years out, you're looking to companies to get established And just as an example, the alcohol industry, you have giants now. You have, Constellation Brands, which owns Corona and this company and this company. So if you want to be in this for a decade or two, you're going to see consolidation where individual companies are going to buy up other companies and become monsters, because that's the way that capitalism works. So you're either in this for the run-up into legalization, and then you're going to be out selling into that hype. Hype and euphoria is when we want to be selling, and fear and despair is when we want to be buying. Buy low, sell high is the general, way that people look at investments. But that time frame is very important. Is it 1 to 2 years, or is it 5 to 10 to 20 years? Because that's going to determine how you approach investing or trading significantly, and what your cues are going to be. And I'll talk about that a little bit more as we go into the game plan. So always plan for the worst case. Like I said, if it's at zero, and right now I have long-term crypto holdings, and I'm using crypto as an example because it's so volatile and it's so unknown, but I account for that as zero. It's literally zero of my net worth, and if in 10 years it's a significant amount of money, that's a big bonus. I had not been planning for that, and that's a good way to keep from negative. The last thing we want to do is look at our stock account and have that ruin our day. And if it seeps into our life, that's when something's wrong. And it's very important to separate those two. So there's a lot of risks, obviously. Big picture, we got to be aware of what Trump is saying at every time. Every day, I'm watching what Trump is tweeting, because it has significant short-term impact on the markets. And that is a part of the game. It's all a giant game. And I can't stress that enough. The financial world is a giant game. I view it as a video game. It's not dollars in my accounts going up and down, it's points. Because if I can detach and say, I made a car today, or man, I just lost X, Y, and Z, whatever, that's when we emotionally attach to things. But if it's just points, it's very easy for us to detach emotionally. And I shouldn't say it's very easy, it's very hard. But eventually, we detach emotionally from that money. So the correlation to the big picture, if the S&P 500, which right now is very close to all-time highs, pretty much since the crash in 2008, it's been on a trajectory like this for 10 years. And it's just been an insane recovery. And we've been hitting all-time highs for a couple years now. Recently, there's some jitters about the trade war and China and what is Trump doing and all of that. But we're still 2-3% from all-time highs, which is very strong. But if the market sees weakness, if the trade war escalates, if a war breaks out between whoever, geopolitical events are going to affect the marijuana industry. Nothing is immune. There's correlations out there where if the stock market is down 20% from its all-time highs, any individual sector, whether it's Apple and Facebook, whether it's the tech sector, they're going to be negatively impacted by that. When people are confident and comfortable and things are at all-time highs and money's growing on trees in the investment world, people are throwing money at things. And a high-risk, high-reward sector like marijuana gets a lot of interest. When things are fearful and the market is going down, people tighten up and they're not willing to make that risk. They want dividend-paying stocks that have been around for 30 years. They want security, they want gold, and they want physical-backed assets as opposed to high-risk, high-reward sectors. So what the S&P 500 is doing is very important as to the health of the overall market and the health of the overall economy. So essentially, if I'm in this sector, I want the S&P 500 at all-time highs, because I know that's when investor and trader confidence is at a peak. And when the Canadian marijuana boom was going on and these companies ran really hard, the S&P 500 was at all-time highs. So confidence was really good. So that was definitely a factor. If it was a different scenario, the gains wouldn't have been as significant. We'd still go up. If the US legalizes in the midst of uncertainty in the market, it will still go up, but it will not go up as significantly as it would if we were at all-time highs. So that's very important. A big risk is the speed of politics. We know politics are very slow. So it could be 6 months, it can be 3 years. We have no idea. I got interested in 2010 when California proposed Prop 19 to legalize marijuana, and it failed. And I was astounded at the speed at which a state legalized, Colorado, Washington, just a few years later. I thought it would take longer. So that was fast for me, but I don't lose sight of how messed up the political system is, and how even if all the people want it and Mitch McConnell, the House or the Senate leader, doesn't want to approve something that the Democrats are pumped about, he'll just neg it. And that can be an aspect that really delays things. And the longer things get delayed, the more dilution comes into play. So dilution with stocks is when a company has to issue shares. So companies are public because they want to raise funds. They want to give you a part of the company. They want your money for expansion, to pay operational costs, whatever it is. So if you have time, if I have to pay the executives and I have to pay the rent and I have to pay the electricity bill for years and years before we get a favorable business environment, because right now it's a very unfavorable business environment for marijuana. They can't deal with banks. They can't get loans. That's federally illegal. So as long as that stays, these companies are going to have to continue raising money in unfavorable ways. And they do that by issuing shares. So what that means is if there's a company that has 100 shares and I own 1 share, I own 1% of that company. Now, 2 years goes by, the company is running low on money. They need money for expansion. They want to buy this company. They want to expand to this state. They need more money. And so to get that money, they issue more shares. So now let's say they have 200 shares. I still have 1 share and my 1% of the company is now worth 0.5% of the company. So the same amount of shares is worth less. So every time a company issues more shares, that's called dilution, because the stake that you own in that company is diluted to less. So it's less concentrated, and that's what happens. That's why companies are public and they raise funds that way. So the longer it takes, the more shares will be issued and the stock price goes down. I don't know how far in depth to get with supply and demand and all that, but essentially if I have a company that's worth $1 million and the price is $1, that means the market cap is $1 million. And if all of a sudden there's 200 shares, then the stock price is going to go down to $0.50 to keep the value of the company the same to account for the new shares that have been issued. So essentially, if you issue new shares, the price of the stock goes down, is what it boils down to, long story short. So if companies need money in an unfavorable business environment, that's what they're going to do.
They just issue shares at random anytime they want, or is there like a meeting?
In the US, they vote. They definitely have votes, but it's behind closed doors. It's from the insiders that own enough shares to control the company. If I own 1% and Jim, the CEO, owns 10%, his opinion and the other board of directors is way more important than mine. In the US, there is a maximum amount of authorized shares that a company has. That's the cap. You can't issue any more than that. In Canada, they don't have that. So it's a little bit ambiguous. So yes, they can issue shares. They know that if they issue shares, the stock price is going to go down, but sometimes they just have to do it anyway. And the biggest detriment to shareholder value is companies continually pumping out shares. And that's why penny stocks, if you look at long-term penny stock charts, they're just straight down. And that's because the companies are just constantly, they're not profitable. They're not taking in big money. They're penny stocks. So they're just selling shares. That's what they're in the business of doing. They get all of their operational costs selling shares, and that leads to a stock price that is just constantly under pressure and going down. So it's definitely something to be paying attention to. And again, the faster that we get a favorable business environment, the better for the USMJ sector.
Do you think it's possible that it would happen while Trump is in, say he gets reelected, like you're saying about timing and stuff? Does that depend on if Trump is president or not, in your opinion? It does. He has said in the past that he supports states' rights, and he actually said this less than 2 weeks ago. He reaffirmed it, where he supports states' rights. So if something gets through Congress and it gets through the Senate and it comes on his desk, he has said that he will sign it. So that is a positive. Trump's on the side of states' rights, which is a big benefit. We don't have to go full-blown legalization. I'll talk about that a little bit more with some bills that are in the works right now, which is pretty much the short-term catalyst that we could be waiting on. Questions are good because I'm losing my breath, so it's good to allow me to breathe.
Not to have no need for extreme detail, but just in general, from a company's IPO moving forward, is there like a metric or kind of a formula that you would follow for, like, according to their market cap, this is roughly how many shares that I would still buy within before dilution is too high and you just let it go?
For me, everything is about stock price. That's the only thing I care about. So I'm not a fundamental investor. They're investors that look at the balance sheet and they look at the income and the revenue and the liabilities, and that's what they make their decision on. I make my decision on what's happening in the here and now. Is the price seeing higher lows and higher highs in a stair-step up pattern, or is it in a downtrend pattern? Because if it's in a downtrend, I don't want to be in it. If it's in an uptrend, that's great. So for me, I ignore all the fundamentals to a certain degree. because that's just my specialty and that's what's been working for me. But there are definitely aspects where people will look at a company and say, okay, you know, they have this much cash on hand. You see that in their financial statement. You could say, well, they're burning through cash at this rate. They're probably going to have to raise funds sometime in the next 6 months. And you can kind of anticipate it in that way. And there are definitely companies that issue a lot of shares that lose interest of fundamental investors because their share count just gets ballooned to a huge amount. And it's supply and demand. If you have a small supply of shares and demand picks up because of whatever catalyst, then the stock's going to run hard because there's not a lot of supply and demand is high. If there's a ton of shares out there because the company is issuing shares, then that demand is not going to move the price as much because there's supplies to fill it. So I use examples with apples all the time, where if a town has 100 apples and, you know, that's the price of the apple is determined by those 100 and people want them and it's scarce, and then a truck comes in with 200 apples into town, that's going to drop the price in a significant way. So the stock market is a lot about supply and demand, which is economics 101. So if you wanted to learn about supply and demand in that regard, there's tons of information on Google. I would just look up economics, microeconomics 101, and you'll find a lot of information. But it is a lot of what stocks is supply and demand of shares. And that's where emotions come in as well. When there's euphoria and hype, demand is high and supply is lower. And when there's fear and despair, supply is high and demand is lower. And that's what dictates stock movement to a large degree. So other risks, individual companies. So right now the sector is so in its infancy, and I'm using Canada as an example. Canada maybe had 10 companies as things were heating up, and then more and more companies start listing on the exchange. But there's some companies that are scams, not scams, but this company right here, CTST, CanTrust, they just got busted because they were literally hiding growing rooms that were way over the amount that they could grow by law from their license. The license says you can grow this much, and they were literally putting up fake walls for when the inspectors came around, and they were lying to shareholders, lying to inspectors, and they got busted, and the stock price will probably never ever recover, and it's probably going to go to zero eventually. So there are bad actors in the space, and if you are in one of those names, it's going to go down. And it's just still a shady environment in that regard. It's not completely regulated. It's not a mature, you know, environment that we can just take it face value and say, okay, this is a legitimate company because they're listed and they've got investors. That's not the way it works. So diversification is really important, and I will talk about that a little bit later. But you know, if I'm all in on one company and it ends up being a company like that, I lose big time, which is why diversification in 3-4 different companies can soften that blow if bad news does come out specific to one individual company. So the reward, there's potential for hundreds of percent. It's probably more than that. Obviously, like I said, under promise, over deliver. If I'm only looking for 200% and it goes up 500%, that's great. If I'm looking for 500% and it goes up 200%, I'm disappointed. So it's all about mindset. And Canadian companies went 500 to 1,000% over a couple years. And I had a group I made the same Facebook post that you've probably seen to come here. And I posted it and I said, this is a great opportunity. Who's interested? 30, 35 people gave me their names and emails. I was like, all right, make an email list. I'm going to do weekly updates. And I was doing all this. And they started doing everything that we anticipated. And they started running up, 500%. And then I've realized after talking to people that only 1 or 2 people did anything with the information that I was giving, and that was heartbreaking. It's like, man, this is what we were waiting on, and nobody participated. So that was a big bummer. But like I said, it's a framework, and we saw, okay, these companies ran this much. The U.S. market is so much more massive than Canada, where it's literally if Florida legalizes recreational marijuana, the population of Florida is 55% the entire population of Canada. So if we're talking 50 states, we're literally talking 10 times the market size, and it's going to be big. It's going to be a very big industry. This is the first time in history where we have a proven billion-dollar market that is illegal and is working towards just the floodgates opening. It's not a new market. It's a very proven market. We know there's demand. We know it's going to be very successful. And so it's just a matter of time for when these companies can really get the catalyst that they need to run hard. And like I said, some of these companies, the winners are going to be in 20 years from now, pending a financial disaster in the market as a whole, but they're going to be huge, and they're going to be as big as Budweiser, or those kind of names, those brand names that we know that are $100 billion companies. So I just ran into something that I wanted to bring back up, and now I lost it, so we'll skip it for now. When was the best time to sell for Canada? So again, time frame is the most important. If you're looking 10 years out, the best time to sell in Canada hasn't happened yet. If you're looking 2 years out, the best time to sell in Canada was the day before legalization actually was implemented. So you had the hype buildup. Markets are really good at pricing in future events. I look at markets as a living organism that it has a brain, because it's the collective brain of everybody that's involved in it. So you have the stocks go up when it looks like Trudeau is going to be elected. You have the stocks go up when he's elected. They go up more when he proposes the bill. They're voting on the bill. It goes up more. And then it gets to a point where the market knows what's going to happen. If it's a predefined event, the market knows. The market knows we're going to legalize October 1st, 2018 or whatever it was. And so every bullish means up, bearish means down, every bullish bet that's going to be made on legalization has already been made. So you reach a point where who's going to buy the day after legalization? Everybody knows about it. They're all buying before legalization. So it's this euphoric climax where the stocks all ran really hard the 2-3 weeks leading up to legalization. The day we hit legalization with the lions out the door and the news coverage, these stocks dumped. And that was the day to take profit. And we were able to see that coming and say, sell the news. It's called sell the news event. If it's known in advance, the market prices it in, and it's not going to go up after that event. That's when everybody takes profit. So again, how the US legalizes will be very key. If it's a big surprise out of nowhere, the market's going to shoot up. But if it's a step-by-step process, if one of the bills that we're about to look at passes Congress, and then it passes the Senate, and then it goes to the president, as soon as the president signs it, we're going to start pulling back a little bit. That doesn't mean we're not going to go up 5 years from now. It just means that that's going to be a temporary top. So just an example, CGC is the leader in Canada, or it was, that's now for debate, but it was the leader for all this time. And it was at $3 and $5 and $7. And by the time legalization hit, it went to $52. So that's, from some points it was a 1,000% gain, but it hit $52. And then we had the first day of sales, and it started pulling back, and it dropped really quick. And it probably dropped, maybe back down to $30 within a few weeks. And that's a huge percentage swing. If I have $1,000 in it at $1 and it goes up to $52,000, and then it's back down to $30,000 just like that. So it's this constant fluctuation, and it's all knowing your time frame in advance is so important, because I'm going to sell before the first day of legalized US sales, or I'm going to hold out for 10 years and not worry about the intra moves every year and just stick this in my retirement account. And when I'm 60, that's when it's going to be my nest egg. So that's very important to distinguish in your game plan. And just for reference, S&P 500 annual return is 10% a year. That's a benchmark that people use. If you're making more than 10% a year, you're beating the system. And if you're making less, you're an idiot. You should just have your money in the S&P 500 and let it ride out. So that's just perspective. If we're going 100% in even 5 years, you're way ahead of what the average of the market as a whole is doing. So just a bit of perspective in that regard.
Can you really quick just give a bird's eye view of the S&P 500?
In terms of where it stands? Okay, good, perfect. So S&P 500 is an index, which is just a compilation of the 500 biggest companies that are publicly listed on the New York Stock Exchange. So it's 500 biggest companies all averaged into one price. And if it's up, we know those 500 companies are up. And if it's down, we know those 500 companies are down. So it's pretty much a benchmark, again, for what the economy is doing and how well these companies are doing. A lot of people talk about the Dow Jones Industrial Average. That's 30 companies. I don't care what the Dow is doing. I don't care what 30 companies are doing. I want to know what 500 companies are doing. That's a much broader perspective, in my opinion. With the Dow, I think Nike's in the Dow, and there was a time where Nike had good earnings and it went up big, and it took the entire Dow up with it because it's such a significant holding of those 30 companies. Whereas, again, just broader perspective, the 500 companies is what I watch for the S&P 500. So that's why it's important. And again, it's just a gauge of market strength. If the S&P 500 is at all-time highs, things are going really well in the stock market. So short-term catalysts, well, short-term, mid-term, there's two bills that are in the works here. And I'm going to talk about the States Act. They're both similar. States Act is the one that we want to pass. That went through, it's the Banking and Finance Committee is what it already passed. Now it goes to Congress. If it passes Congress, it goes to the Senate. If it passes the Senate, it goes to Trump's desk, and then he can sign it. So why is the States Act important? What the States Act does is it takes marijuana off of Schedule 1 and drops it down, and that is huge. Because if you're on Schedule 1, there's no medicinal benefit. You cannot invest, you cannot have research done on it. You cannot have companies investing in it. Banks can have nothing to do with it. It's just a no-touch zone. And as soon as you drop it to Schedule 2 or Schedule 3, pharmaceutical companies deal with those all the time. And they have access to banking and capital. And so when I talk about a company issuing shares for money, they don't have to issue those shares if they can go to a bank and get that money. So right now they can't go to that bank because it's Schedule 1 and it's federally illegal. So if they drop it down to Schedule 2, it opens the floodgates for a number of reasons. We can go to banks, we can get loans, banks can invest in us, and we can also get bought by hedge funds. So a hedge fund is just, whenever I say hedge fund or institutional investor, just think big money, billions of dollars. So hedge funds right now can't touch these companies. These companies are listed on what's called the OTC, over-the-counter exchange. It's the bottom. This is the penny stocks. This is 95% scams and junk. If you've ever watched Wolf on Wall Street with Leonardo DiCaprio, that's where he was playing around, just scamming people. So serious investors, hedge funds, institutional investors, aren't going to touch these companies because it's way too high risk. They're illiquid, which means there's not a ton of dollar volume moving them around. If I want to put $1 billion into a company, I can't do that when it's on this level, or even 10 million, whatever number. So what this does, if the States Act passes, it's off of Schedule 1, it opens up the floodgates to investment because hedge funds will now get involved because these companies will be able to uplist. They can go from the OTC scam penny stocks to the New York Stock Exchange or the NASDAQ, legitimate companies, and that's when institutional investors, hedge funds, or even retirement accounts, that just opens up the playing field to everybody in what is right now a very limited playing field. So again, I talked about the first time in history, an industry is going to, proven billion-dollar industry is going to be opened up. It's the same thing where it's the first time in history where retail traders, we're all retail, where the little guy, average Joe and Jane, can get in before the big, huge, smart money. Because there's literally laws that are preventing them from getting in. Anything else that's ever happened, whether it's electric cars or whatever next big thing, big money got in before average Joe, every time. IPOs, big money is always in before average Joe. But this is a scenario where there are literally laws that are preventing them from doing that. So that's just another one of the potential reward scenarios where if we get in and then big money is allowed to get in, again, demand. That's a ton of demand for shares and the price goes up when that demand hits. So if the States Act passes, and we'll talk about that. So I expect it to pass Congress. Congress is led by the Democrats, and it's a very bipartisan bill. There's plenty of Democrats and Republicans that are all for it. But I expect it to pass Congress. I expect that to be a bit of a bullish event. But again, the market prices the future in, and the market right now knows that it's fairly likely to pass Congress when it gets there. So some of that is what we say is priced in. The market knows it's going to happen. It's priced in to a certain degree. Senate is the hurdle. Senate is led by the Republicans, and Mitch McConnell has said something like, any Democratic bill that comes my way, call me the Grim Reaper, I'm going to cut it down regardless. And it's just that stupid rhetoric of the complete polarization that is leading to stagnant stuff in Washington, as it always does. And this is potentially going to fall under that. So like I said, under promise, over deliver. I don't think this is going to pass the Senate. Could it pass the Senate? Absolutely. But I'm not sitting here holding my breath that it's going to. I'm almost preparing that it's not going to, and then looking forward to the next steps from there, because it would be a big setback. And if you were hoping it's going to pass, that would crush you and say, oh man, that's a big loss. Now we got to wait for maybe a president to get elected or some other bill to come along. And it's just, again, the Republican-led Senate is the hurdle. If we get over the Senate, like I said, Trump has said that if something like this came on his desk, he would sign it. So Congress is pretty much good to go. Trump's pretty much good to go. It's the Republican Senate that is where this is really iffy. And it's just this battle between, you would think something like this that is such a clear dollar sign, that's where, businessmen in Congress and the Senate can really get behind it. But it's the kind of thing where, religious affiliation comes into it, and Christianity and all that. And you don't want to upset your voter base on this side. So it's obviously just a big intertwined mess of politics. And whether it passes the Senate or not, I don't know. Congress is coming back from recess in a couple days. They've been off for a month or so. So we're looking for the States Act to go to Congress and get voted on, ideally sometime before the end of this year. And that would be a short-term catalyst where stocks would respond well if it passed. It would get a lot of headlines. It would get a lot of media coverage. It would get a lot of hype. So that's a potential short-term catalyst to be watching for. 2020 election. So Trump, if he were elected again, I don't think anything's going to change. I think he's too comfortable in the status quo. I don't think he's going to all of a sudden say, oh, I'm going to legalize marijuana. I think it could be a card that he plays where if the polls start to show that he's slipping and the Democrats' platform, one of it is marijuana, which is a big contrast to the status quo, he could say, well, I'll legalize or I'll pass this and let the states do their own thing and take that away from the Democrats and to take that little punch away. That's a possibility as well. But the best bet would to be able to see polls starting to reflect the odds that a Democrat wins. Pretty much any Democrat besides Biden, if they win, legalization is very likely to happen. So if Biden wins, he's already made a bunch of anti-marijuana comments. He's the same old routine, and we don't want to see Biden win. So if it's Bernie Sanders, if it's Warren, Elizabeth Warren, if any of them start to gain ground and the polls start to show it, the stocks are going to start going up before the election. So again, the polls let us know and the market know what to price in. The market prices in probabilities. So if we know we're likely to see Elizabeth Warren win, the stocks are going to go up before the election takes place. And it was the same thing with Colorado and Washington legalizing marijuana. I knew before the vote, based on the polls, that it was going to happen. And the stocks the next day went down a little bit. It wasn't the explosion that everybody would think would be common sense, because the more the polls show and the closer we get to the vote, we can say, all right, everybody knows it's going to pass. So the people that were going to get in based on it passing have already gotten in. Who's going to be buying at that point? So watching the polls of the 2020 election is going to be key, because there is that potential where if a Democrat could challenge Trump and have a potential to win, the stocks will go up in response to that possibility. And of course, if someone did win, aside from Trump or Biden, it would be payday for any of these stocks. Individual states can do their own thing. Illinois just was the first, I think it was the first state ever to do this, where they just legalized marijuana in their state without a vote. They didn't even vote. The population didn't even vote. It was just the legislation said, we're going to pass this. And it was as simple as that. So states can do their own thing. Anytime an individual state does something, it's just a broader market where the companies that we're about to look at, they're MSOs, multi-state operators. Every state that opens up, there's money there. Okay, we can open up dispensaries, we can get grow licenses, and it's just a broader target market, and it's more demand for their product, and they make more money. So the more states that, and that's almost, some people want to see the slow road. They don't want to see full legalization. They want to see state by state, because it just slowly increases the size of the target market, and the earnings of these companies will slowly go up, and it'll be, rather than just euphoria all at once and a big explosion, it'll be a slow and steady snowball rolling downhill as far as gaining size in these companies with their millions of dollars in revenue. So individual states, New York tried, they just failed. And Florida is potentially going to vote in 2020 to legalize. They had something where they had to have 65% of their population approve it to legalize it on the last vote that they did, and they got something like 61 or something. It's something to do with the Florida Constitution. I don't really fully understand that, but it wasn't enough. But like I said, if they legalize, that's 55% of Canada's population. That is a huge number of people that opens the floodgates wide open to another large market that's going to make these companies a lot of money. So watching what each individual state is doing, whether it's medical, every medical state, every legalized state just tilts the scales a little bit more in that direction for the inevitable that we know will happen. And we just want more states on team good guy, the more the better. So watching what the individual states do is very important. And there's a lot of seasonality to these stocks. These stocks go up in the fall. In general, after watching them 9 years, they go up in the fall, and that has a lot to do with the voting season, because that's when these individual states are voted on, and it's in the headlines, and media is talking about it, so people are thinking about it. And then in the summer lulls are when things are really slow, and they usually pull back. So anytime we're heading into an election year, that's when the most states have legalization on the ballot. That's when there's the most press coverage. Again, the more the media and social media is talking about this, the more people are saying, I could invest in this. And it's just this big, it's just information that sparks the idea for people to put money into it. And it ends up being a self-fulfilling prophecy to a degree where the more the media is talking about it, the more average Joe and Jane's going to be interested in it, and the more the stocks are going to go up. So we always want positive media attention, and individual states doing their own thing are big for that. So deals, individual companies, we know the alcohol industry is threatened by marijuana. We know the pharma industry is threatened by it, and tobacco as well. Everybody's threatened by it. So there are companies that are trying to position themselves to hedge against their own business. And with CGC, the leader in the Canadian MJ space, Constellation Brands, which does Corona and a bunch of other alcohols, they came in and said, hey, CGC, here's $4 billion. Give us a huge stake in your company. We now own, whatever percent of your company, and we're now hand in hand. We're not the same company, but we have a huge stake in you, and we're going to benefit if you do well. So that news alone was the first of its kind, and that caused CGC to run 100% in a few months. And that was just like, wow, the big boys are really coming here. And it's only been 2 companies now that have done this. A tobacco company, Altria, is the other one that did it with another Canadian MJ company. Pharmaceutical companies have not gotten in yet. And again, this is another aspect where the States Act, taking it off of Schedule 1 and going to Schedule 2, allows these companies to be much more comfortable making deals. And so again, why are the deals important? If Constellation gives CGC $4 billion cash, that's enough to run operations, to buy other companies. They don't have to issue any shares. There's no dilution. And that is as good a news as you can get as a company, that a huge player is giving you a huge cash influx to do business with. So that's going to be another huge domino effect, because now that Constellation's done it, you better believe that Anheuser-Busch or whoever else is saying, well, if they're doing it, we better get on board too, because they're going to leave us in the dust if we don't. So it's going to be a domino effect once these companies can start getting involved. Yes, sir.
Does that mean then that if Constellation has done this, and then say Anheuser-Busch or any of the other massive companies, if they do that, then they're able to keep all of that money internal then? Because there's no need for the IPO. There's no need for any of the funding coming in from shareholders. So it's just all kept internally, and they have their, Constellation would have their percentage kickback with the growth, but it goes straight to them. Right, so could that kind of eliminate the space entirely if these bigger companies kind of do that to each other?
The companies will stay public unless they buy a majority share and then take it private again. So if they don't take the company private, it'll stay a public company. Shareholders can still buy and sell shares. Constellation's benefiting. Anytime the stock price of CGC goes up, they're making a bunch of money. Anytime CGC brings in a bunch of revenue and investors are happy, they're happy as well. So it gets to a point where $4 billion wouldn't do it. You know, they'd have to do 10, 20, however many billions of dollars to take the company private and fully absorb it. Right. That is a possible end game, where if Constellation did their 4 billion and then next year they do another 10 billion, eventually the shares that I hold of CGC will become Constellation shares if they buy out the company. And I'll get a premium, which means I'll get a payday from that. And that happens with companies merging. If company A buys company B and I'm a shareholder of company B, I am then going to get company A's shares in my account. I'll get the payday, but I no longer own company B. So that is a possible end game where these public companies will get bought and absorbed by the major players.
Right. Just depends on how long.
Right.
When you say you get a payday, does that mean because company A's shares are worth more?
Yes, they're willing to pay more. They're saying CGC is, let's say it's $10 right now, and I own CGC shares and it's $10, and then news tomorrow comes out, Constellation is buying CGC and they're buying it for $14 a share. So I just made 40%. They're going to buy, Constellation is going to literally buy my shares for $14, and they're either going to give me cash, which sometimes happens, or they'll give me that amount in their own shares. And if I don't want to own Constellation, then I can just sell and it'll be worth more. Or I can hold Constellation and just be part of that company now, because the company that I did own is still a part of this company, but now I'm owning the alcohol company as well.
So I guess in this case then, like that would only matter if you had the opportunity to buy CGC first, that you already had the $10.
Already in.
To my question then, what would be inhibiting companies like CGC or any of the other US-based marijuana companies from, like, there isn't the funding like being offered yet for them to just remain private? And
too high, well, they're already public. There are a bunch of...
They started off already there.
Right. So they've already done the IPO phase, or they've already...
Out of necessity, because if they had had funding coming from somebody big, they wouldn't.
Right, exactly.
Okay.
So yeah, it's very high risk. These companies are still, again, just dipping their toes in. And this was the first of its kind last year. So there are a bunch of private companies that will never go public because they have enough money and they are funded. And there will be companies like Constellation that are buying private companies. Those private shareholders are going to make bank, but that's a different world.
Right.
So yeah, yep, good question. So those are the short-term catalysts. Now we'll talk a bit about individual companies. I'm going to go over 4. And this is just, again, pushing you to, hey, check out these companies, read a little bit about them. These are ones that stand out as some of the leaders in the space right now. Again, it's a very undeveloped space, and a lot is going to change. Some of these companies may fall out and go to zero. Some of them could be scams. I don't think they are, but it's possible. The other company, Canatrust, was really good at hiding all the shady things that they were doing. Some of these could become the leaders and be up 3,000%, 10 years from now. So I just want to emphasize again, a lot is going to change in this space. It is so very undeveloped. It's like, imagine the first days of the internet. Some companies got massive and made it, and a lot of companies fell under the way. Am I sounding raspy?
Just if you want.
Thank you. So the first we're going to talk about is Origin House and Cresco Labs. So these are 2 companies that are currently in the middle of a deal, a pending deal. So Cresco Labs has bought Origin House, but the deal is not going to go through unless the Department of Justice approves it. And you might think, well, they're never going to approve it, but they actually already have done this for previous marijuana companies. So that's already happened. So we know there's precedent that they will approve it, but it's the kind of thing where the DOJ asks for more information, and the company then gives more information to the DOJ, and then they ask for more information. And it's just this back and forth game where they're trying to suffice all of the questions that the DOJ is going to have, and it's a long, slow road. But when the DOJ says, okay, this deal can go through, it's good by us, that means that the shares of OH are going to be transferred into shares of CL in your account. And it's just a pending deal. And why that's important is because right now there is a discount. So the market prices the future in that it knows when it's certain, but this deal is uncertain because we don't have the DOJ approval yet. So that means OH is trading at a discount. So to try and explain this, I'll talk about the dual listed and all that in a second, but imagine that OH, if the deal goes through, the terms of the deal are that every OH share that you own, Cresco Labs is going to give you $1 for it. Right now, those OH shares are trading at 85 cents. I'm using made up numbers, but it's trading at 85 cents. And why is it trading at a discount? Because the market is not sure that the deal is going to go through. So if tomorrow the DOJ says this deal is good to go, OH, which is trading at an 85% discount, is instantly going to go up 10-15% to get to the point of, okay, it's a done deal. We're going to get this much money from CL, Cresco Labs, for our shares. So that's a little short-term potential catalyst that is present in this company, OH, that is not present in other companies because this is a pending deal. It's a little bit of a specified situation. So dual listed means that there's a Canadian stock market and a US stock market, S&P 500, all these different things. So OH is traded on the Canadian market for this company, and ORHOF, these are the stock tickers. So if I want to look up the stock or the price of the stock, this is what I type in. For the US, it's this ticker. It's the same company, and they're going to go up and down the same amount at the same time, but one's in Canada trading and one's in the US trading. So if I'm a US investor, I'm looking at the US ticker and the US company just for ease. I can buy the Canadian ticker. I have to worry about currency exchange fees and all that. So just to keep it simple, you want to be looking at the US listed ticker. Again, same company, price is going to go up and down pretty much the same amount, but they're just split in that way because that opens up so the company can get capital from Canada and it can get capital from the US as well. Whereas if it was only in one country, it would be limiting to a certain degree. So this is the company that is waiting to get bought out if it's approved, and this is the company that is going to do the buying. So you will get X amount of CL shares for every OH share that you own, and right now it's been fluctuating. The discount has been about 80 to 90%. So again, OH relative to CL is trading less than it would be if the deal were approved. So I'm keeping an eye out for that potential announcement because the day that's announced, OH is going to very quickly catch up to where it should be with its value relative to CL. And that's getting a little bit complicated for people newer to stocks, but just know that there's a pending deal. If the deal gets approved, OH will benefit by its price quickly going up to reflect the conditions of the deal that have then been approved. So this is one company. Origin House is less of a physical presence, and Cresco Labs is the physical presence. They're in 10 states. They have 26 retail locations. They have 8 grow licenses, and these companies are just constantly expanding into other states and getting more licenses and more retail locations. Yes, sir?
So the details of that pending deal between Cresco and Origin House and the potential, as you said, for when that deal was approved, then OH increasing to level out in value to the other. Are you privy then to the details of essentially what amount that increase would be or what percentage?
It's all public info. So you can do the math and you can say, okay, if the deal gets approved tomorrow, it's trading, and we can track it. It's at 80% discount today. Tomorrow it's an 84% discount. It fluctuates. But yes.
Looking at like conservatively a 15% increase almost automatically when that approval, when it goes through.
If it's at an 85% discount, I would expect it to go up to about 95% right away.
So at least 10%.
Yeah.
Yeah.
Yep. And that's why I've been personally trading OH a little bit more, not knowing when the news comes out, but knowing that that's a backwind and knowing that, hey, we could luck out. And if I'm holding shares and that happens, it's going to be an extra bonus. That's had me a little bit more interested in OH as opposed to these other companies. So right now, as we speak, I do have OH shares or ORHOF shares in my account.
Somebody said the market hasn't priced in the deal. If it didn't go through, do you think there would be a big drop off in the OH
yes.
share price, or how do you think?
Yep, good question. So if it were denied, again, they're not really denying it, but they're saying we need more information and they're delaying it. So it's a little bit different. But if the DOJ said this deal cannot happen, then yes, OH would probably drop as a response because there's a lot of people like me who are in OH looking for the deal to happen. And if it doesn't, people are going to bail and it will drop the price pretty hard, pretty quick. But again, there was another company, IAN, which is we're going to look at. They bought another one, MPX, same deal, not same deal, but similar deal. The DOJ, after a while, approved it. So there's precedent where they have approved it before. But that is absolutely a risk factor, and that's the reason it's trading at 80 or 85%. Because if it were a sure thing, it'd be at 95 or 100%. So the market is pricing in that risk, and that's why the reward is present. The reward for that 15% quick spike is present because the risk of the deal not going through is present. So that's OH and CL. Next one is Ianthus. So this is the one that already bought another company, IAN in Canada, ITHUF in the US. They bought another company, MPX. The DOJ approved it. Those two companies merged. I actually owned MPX shares. As soon as I saw that deal was going to go through, I bought MPX shares. My shares were then transferred into more shares of IAN, or I should say more value in IAN. So I did make money from that deal going through. 11 states, 26 retail locations. They're expanding in Florida. And again, you can follow these individual companies. They just opened up a store in Miami. They've got some good locations. Locations of stores is obviously really important. If I've got a dispensary in Miami, in Florida, or if I've got a dispensary in middle of nowhere, Florida, they're very different. So not all dispensaries are created equal. Location's very important. So this is one that is definitely has my attention. One of the aspects of their company is Hemp for Life, which is all CBD. So they're selling, I think they have some in Dick's stores. They've got some in, I think maybe even Abercrombie and Fitch. They're expanding CBD as well as the marijuana business aspect of things. They have some pretty decent experience in their teams. And again, you can go and look at the CEOs of these companies, and you can look at the CFOs and see what their previous work experience is. And they do have some impressive previous experience in big business. So that's one benefit to them as well. But just another one to be keeping an eye on overall, to watch how they expand, to watch what their numbers are. And Florida is a really cool state because every week they will update a list and they'll say, these are the public companies. This is how much dried bud they sold. This is how much extract they sold. And you can literally watch the numbers go up or go down, and you can watch their dispensaries location increase or decrease. And IAN is an example of, in Florida, they maybe have 8 locations at this point, and they're selling more weed than a company that has a lot more locations. So that tells me that they have better locations than that other company because they're getting more foot traffic and they're selling more product through them.
And this is medical because they're not recreational licensed yet?
In Florida, correct.
Where is that list you're talking about?
Oh, I will have to find it. It's posted every week, and I will have to write that down and send a link. I'll post a link for that. And I'll get to the last page in this thing is resources. And there's CNBC actually just did an hour-long documentary thing about the potential risk or reward in the U.S. marijuana space. Very timely for this talk. It was a little bit more fear-mongering than I would like to see, but there's some good information there, so I'll post that link as well, and that's worth watching. So that's IAN. Another one is Curaleaf. This is the biggest marijuana company in existence right now, even bigger than Canada, because they just did a deal where they bought the biggest private company. So this is a public marijuana company that bought the biggest private company, and they are now the big boy in the space. Bigger doesn't always mean better, but in an emerging industry like this, it definitely helps for a number of reasons. Access to capital, and even it's a popularity contest at this point to a certain degree, because if everybody knows my name, if I'm a household name, then people are going to invest in me. I'm going to get on CNBC. CNBC is the biggest financial television network. It's where Jim Cramer yells and presses buttons and stuff. But if you're in stocks and you want to watch TV, that's what you're watching. And so Curaleaf, every time they have a big announcement or their earnings come out, they go on CNBC and they get an interview. And that's, again, it's exposure. And that's introducing people to their company. And companies that aren't doing that are losing in the popularity contest aspect of things. So it's the biggest company, 19 states, 67 retail locations, 18 cultivation license. Those are the different stock tickers. So yeah, they're definitely one to watch.
So in a sense, when you say the popularity, you mean that if they get on the news, then they get more investment into their company, which means they have the capital to buy more retail locations. So it's not necessarily that they're doing anything different in their services, like maybe their actual brick and mortar is a little bit nicer, or their product is maybe 1% better in its grade, but otherwise it's just, it is, if you can get news exposure, more money comes in, you can fund more retail places and therefore hedge out other people.
Yeah, supply and demand of shares. If there's more demand created for shares, the stock price is going to go up.
And the demand in this case is primarily just by getting the name and the good imagery out there, as long as you're actually providing the service that you say you are, which in this case, of course, they're going to say.
Right. If you take two identical companies, the one that's going on CNBC and the one that's not, the one that's going on CNBC is going to have a higher stock price.
So how messy is it of what's determining who's getting the airspace? That's got to be the real juice.
Money, like right under the table.
Right.
Yeah. Oh yeah. It's all again. It's all a rigged game. Get that out of the way now. The stocks are a rigged game in every way, shape, or form, and it's just learning to be able to play the game and get our little piece of the pie. I view it like I'm the little feeder fish riding the sharks, and I'm picking their scraps. These guys that are doing billion-dollar deals, I'm just taking my little piece of the pie, because it is a wild world out there. Anything where there's money involved, significant amounts of money, it's not a fair game. It's not a level playing field. So stocks is by no means any different. And without a doubt, there are relationships all over the place that are giving people advantages. Inside information, you better believe that when Curaleaf announced that they were going to buy the biggest private marijuana company, there were a lot of people that knew about that beforehand. They bought shares, the news comes out, everybody after the fact buys shares, the stock price goes way up, and everybody in the know beforehand makes out like bandits better than everybody else. So without a doubt, there's a lot of, there's so much insider trading going on, and every now and again the SEC, which has a tiny force to try and combat this, they'll go after Martha Stewart to make a big headline case that gets in the news, when in reality, 5,000 other people insider traded the same day she did. And it's a tiny speck compared to the grand scheme of what's actually going on. So that's Curaleaf, the biggest one. Last one, Charlotte's Web. You may have heard of this one before. I had actually heard of this before it was a company, but they deal in only CBD. They have a strain that has been key for epilepsy in children. So straight CBD, no marijuana. That means a little bit of advantage as far as less legal hurdles. There is a decision expected to come out from the FDA in the next few months as to how we're going to regulate CBD. Can it be put in food products? That's a big unknown at this point, but there's the possibility that some regulation could be beneficial to a company like this that's established, because if there is regulation put into place, all these small CBD companies that are just jumping on board the bandwagon, they're not going to be able to pay the money to get the inspections or whatever is needed to meet those regulations. So if a company can meet regulations and is already well established, that could potentially cut out a lot of their competition, and that could be beneficial depending on what that ruling is from the FDA. So
regulations can be a barrier to entry for other small
oh yeah, big time. Same thing as USD or organic right now. I was working on a farm and we did everything straight by the book organic, but we're not going to pay $10,000 or whatever it is to get the guy to come out and test the soil and see our operations. So we can't say we're organic, even though we're doing everything organic, and that's a barrier to entry from keeping that organic little word off of our produce. And those that are big enough to pay for that privilege are going to benefit in the grocery store compared to a name that doesn't have it. There are potential buyout targets. So again, we know CBD is a huge craze and that's not going to go anywhere. It will reach a point of oversaturation where eventually we have too many companies, and again, supply will reach demand and then it will go over and it'll say, oh, that's too much. But right now demand is exceeding supply. So potential buyout target, it's a much less risky for a bigger company that's not dealing in marijuana or hemp to come in and buy a straight up hemp company, because the laws in the US right now are much more favorable for hemp than they are for marijuana. So a little bit less risk with Charlotte's Web in that regard, but also if the States Act passes, it's not going to benefit as much, in my opinion, because it doesn't benefit from Schedule 1 going to Schedule 2 because it doesn't deal with any of that. So, establishing a game plan. Never investing more than you're willing to lose. That's stock investing 101. Again, detaching yourself as much as you can emotionally from the money and assuming it's all zero. Again, I cannot stress that enough. It just really helps with the psychological aspect of things. There are people right now that the marijuana sector right now in its summer lull, these US marijuana stocks, the overall S&P 500 dumped in December and then bounced really hard. And from that bounce that went really hard, these US marijuana stocks went 100 to 200% in about 4 months. So they went that hard, and then come April, they topped out. And since April, they've been pulling back, which is now what, 5 months? 5 months of pullback, 50 to 60% down. From that 200% up, 50 to 60% down. And so there's a lot of people right now that are checking their stock account every day, and it's ruining their day. And you can just tell, you can watch it impact their mood. You can watch their irritability. It's a very bad scenario to be in when you are daily checking on something and it's making you feel bad every day. It creeps into your life, and that's the last thing that we want to see happen. Just like the other thing, if you're making a bunch of money and you're euphoric in life because you're making money, that's almost just as bad, because again, you're letting your emotions be dictated by money, which is easy come, easy go, especially in this game. So having a game plan written down, write down your game plan in front of you so you can see it. It's real, it's tangible. You can say something in your head, but then when the time comes, it's very easy to go against that and to not listen to yourself unless it's right in front of you, which can help. And then you can still break your rules, and then pain follows. But I will exit if I'm down X dollars. If I put in $5,000 and it drops and I only have $2,000 left, that's my point. I'm cutting it, and I can't lose any more than that. I need that money. So that's a possible stop loss. We call that a stop loss, because if that level hits, you bail and you stop the loss. I will sell when I reach X profit. You have to have that game plan, because you will get into a mode where I'm up 200%, but it's going to go higher and I can make more. And that's where greed and euphoria grips you, and it really skews your decision making. So I would either set, I'm going to sell when it hits X dollars, or I will sell leading into legalization. And that's where your time frame is so important. If I'm only looking 2 years out, I'm going to sell before the first day of legalization, or I'm going to sell before we see whoever elected that's going to legalize marijuana. That having a short-term known event, just concrete. This happens, I do this. If A, then I B. That keeps it very simple. Because again, I promise, if you're leaving your decision making up to when it's in the heat of the moment, your emotions will completely take over and lead to bad decisions. It happens in both directions. Not selling up at the top and then watching half of those gains disappear, and selling at the bottom and then watching half of those losses come back. So that is the hardest part about trading stocks, and something that I've been working on for 9 years is having the game plan set before ever entering the trade. This is where I'm going to sell. This is where I'm going to sell. And that's that. Those are concrete levels. Have to abide by them. And again, if you're looking 10 years out, like I have friends that if you have a baby, I'm going to give you some shares of marijuana stocks, and they're not going to touch or look at them for 15 years. And that's a completely different mindset and a different game plan, where it doesn't matter what's going on. None of this matters. And it's just hold it and see in 15 years. And it will likely be higher at that point. Obviously, there's always the unknown factor, but time frame is first. Establishing the game plan and levels comes second. Diversification, if I'm in one company and that company goes south, I'm hit hard. If I'm in 4 companies and one company goes south, that's a lot better position to be in. So being in a few companies is more diversified, and it helps manage that risk. My plan, I'm already in some of these companies, but I have the luxury of watching these companies every single day. I watch the news related to these companies every single day, and none of you should do that. Don't give up your life and say, I'm going to do this now every single day, because it takes 10,000 hours for it to be worthwhile. But my point is, for me personally, I'm being very patient and I'm reacting on a daily basis to things that I see. So I have more shares in marijuana companies today than I had a week ago because I saw things that happened. I saw dollar volume demand for shares spike one afternoon. And that stood out to me and said, something's up there. So I bought some more shares. They went up a little bit more the next couple of days. So I'm reacting on very small short-term clues. And because I'm so tuned into everything, I can see news come out and instantly react to it. So my game plan is not going to be what's best for 99% of people looking to get into the MJ space. That being said, there's other accounts that I'm keeping an eye on where my plan is just slowly entering. I'm not buying everything at once. If I want Curaleaf as a company and I want to own shares and I have $2,000 I want to put in Curaleaf, I'm not buying $2,000 tomorrow. I'm going to buy maybe $600 tomorrow. And then in a few weeks, I'll buy another $600. And then maybe in a couple months, I'll buy another $600. That's called cost averaging. Averaging your cost in, because you're not going to nail the bottom and you're not going to nail the top. And if things keep pulling back a little bit more and I buy at $5 and I buy at $4 and I buy at $3, my average is $4 instead of $5 where I first bought. So slowly averaging in and not doing it all at once. The only time I would do it all at once is if we have that catalyst where this is the news we're waiting on, get in now because it's going to run up. So if news came out that the States Act is going to be signed by President Trump, that's when you just get everything in now and ride that out a bit. But slow. There's no rush. And I will definitely keep everybody posted because I'm already doing it for my other job with the Chart Guys on a daily basis. It's very easy for me to let you guys know this is happening with this company, this is significant news, or this is a significant catalyst, or this is a red flag. So I can give little updates in that regard as to what's going on and just to keep you from having to watch as closely, because I'm watching as close as possible and I can put in some time and effort for you all. All right, I'm about done talking. Let's see. I think this is the last one. No, a couple more, two more. So market cycles, I've already talked a lot about this, so it'll be quick. Fear and greed, two most powerful emotions that run the market. When things are going good, they're going to keep going good forever. I'm going to keep making more money. When things are bad, it's never going to go up. It's always going to keep going down. And that's what runs this market. These cycles are how I'm able to trade and make money because they always do this. I knew to sell the day before legalization in Canada because I have seen hype markets in the US as states were legalizing. I saw what happened when Colorado and Washington legalized. It went down the next day. So I was telling everybody, sell Canada the day before. This news is priced in, the market knows, and it ended up dropping really hard. But it's the same thing over and over, and that's what leads to fluctuations in the market. And when those emotions are their highest, logic and valuations go out the window. So old school stock traders and the people on CNBC are going to look at a company and say, well, they've got 100 million in revenue and they've got liabilities of this, so that makes the stock price worth this much. That means nothing. It's almost like the stock price and the company are completely separated, where Beyond Meat, this plant-based meat company that just IPO'd, their stock price went up an insane amount because everybody's talking about it. It's this next hype thing, and the valuations at what that stock price reached and what the market cap of the company reached and what they were actually doing in terms of revenue was so disconnected. It just shows you how significant of a game this is and how, again, company and stock price can completely separate as far as breaking that connection when emotions are their highest. So we're going to see huge euphoria and greed as soon as we get one of these catalysts, and there's going to be people that buy then and think it's going to keep going up forever, and those people are going to lose. So people that bought the first day of Canada legalizing marijuana, the first day of sales, it's just getting started in their mind, they're down right now. And that's because that was the peak euphoria. So emotions. I already talked about markets pricing in known events. So CGC, it was the leader. It went $7 to 52. Now it's at 24. So again, anybody that bought in the euphoria and hype is down money right now. So that's why getting in before that euphoria and hype and before everybody's getting in is so important.
Do you see any rhyme or reason at all for those companies like the plant-based meat company for them having such an incredible spike and disconnection from their actual valuation? Is that just at random, or do you see any correlation between those things?
Media has a lot to do with it. The more coverage it's going to get, the more people are saying it's the next best thing. It's also supply and demand. So there's a limited, when you IPO, there's a limited number of shares. And there's also a thing called shorting the market where you bet on something to go down. And when an IPO comes out, you can't short them in the first week or two. So it's almost like this free range where if demand is really high, it's going to shoot the price up because there's nothing to counteract that with people betting on it to go down.
Right. For that initial period, you're saying.
Right.
Yeah.
Is part of the game media plants? Because I remember the Beyond Meat thing coming out, and I wasn't even following it, but I saw that everywhere. Like, everyone's going to Taco Bell for Beyond Meat. I mean, do these companies buy like media placement in order to influence their price? Is that part of this game and like the charade of the stock market?
Without a doubt, yes. In that specific example, I don't know. They were making deals with big companies.
I just remember seeing their name everywhere.
Yeah.
That week, and I was like, what is this company?
And it's a self-fulfilling prophecy. If the stock goes up 100%, more people are talking about it, more Twitter posts about it. And it's just this hype machine.
Okay.
And it happens every now and again it happened with, what's the other, GoPro. GoPro was $95 a share at the height of its hype, and it's now trading at like $6 a share or less. So it IPO'd, it shot up, and then it's done nothing but just slowly come back to reality. So it happens all the time, and fear and hype markets are the way the stock market works. So I've already said this stuff. Cool, that saves time.
I have a clarifying question, I guess, about the day before legalization or before an election thing.
Mm-hmm.
Can you speak more to the election piece? You said if we see somebody get elected, we know it's coming. So does the same rule apply? Wait till the day before legalization, or are you saying that the election day is the event and that's when you sell?
It'll be so the Canadian example was, we know this party is going to legalize marijuana. They won. That wasn't the sell the news event. It was to a small degree. You know, we went up right before it. We maybe pulled back a little bit, but then we ramped up into the first day of sales. So it won't necessarily be, maybe to a small degree. Again, we can do this peak thing and then recover and then just go higher, which is what Canada did. Election of Trudeau, we're going to legalize marijuana. We pull back a little bit. Okay, the bill's actually going to be proposed and it's getting voted on and the votes are going to pass. And now we're heading towards legalization and the media articles are everywhere. And then the first day of sales. So for the US, if let's just say Elizabeth Warren is in the running with Trump and the polls start showing, hey, she's going to win, the stocks are going to go up. And then when she wins, that might mark a temporary little top. But there will be a lot more hype after that, in my opinion, of now she's introducing the bill and the bill's going to pass. And so it won't be the election itself, in my opinion. And again, it depends. If we run up, how much we run matters a lot. If we run 1,000% into the election, yeah, we're going to pull back hard. If we run 200%, then there's still a lot more room to run into the first day of actual sales. So how we get there definitely has an impact.
Cool, thanks.
And again, yeah, this will be the kind of thing where I will definitely be all over it and an open source as far as reading how it's going to play out.
One weird thing tying into his question, do you think the markets would ever tie in? Or we see a pullback at that sell the news event? Do you think that they would ever, I mean, I know you said they're pricing it in the whole way.
Oh, it'll be more priced in. People will be more prepared in Canada. I was saying sell the news and people were all over me. You don't know what you're talking about. Everybody that played the Canadian market now said, oh, now I learned what sell the news is. So maybe a few days before it starts to get priced in. So yeah, the market is a very smart living organism, and it learns. It learns. The collective learned about sell the news in the marijuana sector that day, big time. All right, resources, me. I do this all day, every day. So ask me questions. I'll answer them when I can. If I don't have time and I'm too busy, I will take a couple days and then I'll get back to you. So don't worry about bothering me. CNBC Hour Special, I'll post that somewhere in the group. Again, for those of you who aren't in the group or not on Facebook, are people on Facebook? I know Casey's not much on Facebook. Yeah? Zach, you on Facebook?
I am.
Enough to get the link? Yeah, cool. All right, so yeah, I will do it there. StatesideCannabisInvestors.com, very bare bones site, nothing fancy, but they got good information about these companies. Google the States Act, read about it. Individual companies. Yeah, watching what states are going to legalize in 2020. We're going in the process right now where some states are going to get enough signatures to put it on the ballot. So that's what we're going through right now, discovery of who's going to get the measure on the ballot. And then as we head into 2020, all of 2020 will be polls. How likely is this going to pass?
So what we're really looking for is the federal legalization and the changing of the schedule.
Well, there's the States Act. The States Act itself is a bill that would take the rescheduling and would not be federal legalization. So that is the more short-term possibility, which would probably come before the election,
Okay.
If it came.
Now, is there any reaction or any opportunities if you see Florida legalizes it? Is there?
Yep, that'll have a positive impact on the stock prices. If we get more and more likely that Florida is going to legalize, then companies that have more dispensaries in Florida are going to respond more to it. There's a company I didn't put up there, True-Elieve, T-R-U-L, and they are only in Florida. So they're not an MSO, multi-state operator. They're only in Florida. That limits their exposure. That makes them less diversified. But if Florida legalizes, they're going to benefit the most because they have a grasp on Florida's market right now, because that's where all of their effort is.
What was that name again?
T-R-U-L. Red flag about T-R-U-L is the CEO's husband is currently on trial for fraud. And there's a bunch of web ties between her and him and this company and that company. And that could easily go up in smoke. So that's a big risk.
Quite the exciting game.
Oh yeah.
It's such a fun.
There's got to be a fair amount of smart money that's getting in on this in a more anonymous way, right? There's got to be a lot of that kind of more dramatic, volatile money, but there's got to be huge dollars that are just waiting. Right?
Oh yeah.
Already in.
There are some hedge funds that are more high risk, high reward that are already in this space, but it's such a small fraction of the global dollar volume of what will come in under certain conditions. Because again, high risk, high reward, there's a lot of companies where it's just not worth it. I mean, if I'm running a hedge fund where I'm managing $10 billion of assets and I've been making money for my clients trading oil stocks for 10 years, they're not going to be happy if I'm getting into marijuana stocks on the OTC penny stock exchange at this point. But they'll be much more open to it when these companies are on the NYSE and it's not a federal law that they're breaking.
In terms of States Act and federal legalization, can one happen without the other, or is one more beneficial than the other? Like, would it be better to have states and not federal, or vice versa?
I want the States Act first, and I mean, just from a stock market perspective, it would be beneficial to have the States Act pass and then to delay federal legalization, because that holds competition off. Just like we were talking about barriers to entry, if you get federal legalization, all these companies are now going to be competing. If you only do the States Act, it's going to open the dollar floodgates to come into the established companies, and the ones that already have their footprints in all these states as opposed to, and it'll even keep out foreign companies. If we go federal legalization, Canadian companies can come take over. You can have Chinese companies come do marijuana in the US.
So if you get federal legalization before states, then automatically all the companies have access to banking resources.
They will still go up. All the companies would go up under federal legalization. It's floodgates regardless, but if we're looking at a 3-year timeline, again, it's that slow trickle of just keep steady going up to favor these companies versus boom, and everybody's in now.
It seems like if anything, doing it via the state ad first would give, if there even is a smaller guy in this game, it would give some edge of competition or some way of getting in first, establishing a market locally.
Yep.
Before all of the Walmarts of the world or whatever come in and just gut the whole thing.
Right.
You'd think.
Yep.
Is there much talk at all about what kind of, like, if and when it gets to federal, what kind of protective legislation there might be for the smaller market world, or is it just it's going to be the Wild West like anything else?
Yeah, too unknown. And I think capitalism is too ingrained where they're not going to try and protect little companies. They're going to...
Right. So it'll be industrialized just like anything else pretty much right away.
It'll be consolidated. The bigger companies are going to buy up the companies, and it's going to be put into the hands of a few. I mean, if you look at the statistics of alcohol companies over the last 2 decades, how many there were and what their sizes were, and you just did this year-by-year progression, it's just big bubbles eating up little bubbles and getting bigger. And it's just fewer and fewer companies, bigger and bigger companies, and that's what's happened in so many industries in everything. Amazon, I mean...
I know a CBD company locally that a CBD hedge fund came in and bought 70% of their private company.
Yeah. So yeah, that's also, there's a lot of private company investment, and that's another way that people are getting exposure to not have to worry about, the stock market price fluctuating. So that's definitely an aspect. That's interesting. I'm done.
Thank you, sir.
Yeah, absolutely.